Hello, everybody. Good afternoon. I'm Helen with ADU1, and we are here today on Wednesday for our weekly webinar. And today we'll be having a special guest to discuss financing. So thank you to all of you who joined us last week. I know we were having some technical difficulties, but luckily we were just able to get everything arranged for this week. So thank you for joining us today. I will go over the regular webinar stuff, all of the rules for the ADUs in California relating to multifamily properties and single family properties. We'll go over the new ordinance, how many ADUs you're allowed to do, where they can go, other rules and guidelines. I'm going to kind of go through that a little swiftly because I do want to make sure we have enough time for our special guest today, Fred Arnold, who will be discussing your financing options for financing your ADUs, residential ADUs, so for your single family homes, all the way up to 4-unit multifamily properties, as well as if you are a first-time home buyer or if you currently have a home and you would like to offset the mortgage, or you think jumping into the current market right now is too difficult with the prices, Fred will definitely give you some ideas on how you can help reduce your mortgage, get some monthly income to help with that, and be able to buy into today's kind of crazy market right now. So even though it is definitely more expensive these days to buy a home, especially in California, it is an investment at least. And Fred will go over a lot of excellent financial points. So real quick, my name is Helen. I'm with ADU1. We're a division of Retrofit One. We specialize in seismic retrofitting and multifamily and single family ADUs, accessory dwelling units. We've been working with homes and multifamily properties and communities and HOAs for about a decade now, and we are a family-owned and operated company. I will now go ahead and start my presentation with all of the rules and the guidelines about the ADU ordinance. So here we go. All right. So hopefully everybody can see this. And for any questions, there is a chat in the room in the video right now. So just feel free to add them in the chat, and I will be able to see them after the webinar, and Fred as well. An ADU, for those of you who are unfamiliar, it's an accessory dwelling unit. It is an accessory to the primary structure, so there has to be a residential property on the lot already, whether it's a single family home or multifamily. If it's not there, it has to at least be, in most cities, proposed. So if you just have an open lot, you can submit plans with a proposed residential unit home building with the ADUs at the same time. But you cannot do them if there's only commercial, like offices or retail on the lot. In Los Angeles, you can do it on a commercial zone as long as there's residential use already there. It has to have full independent living facilities, such as a kitchen, bathroom, and the communal space, and other terms that are used for the ADU are granny flats, guest house, in-law suite. The ADUs have always been used for, additions or expansions, family members staying with you. We like to really focus more on the rental income aspect. We like to help you maximize your rental income, and our analyses also show how to maximize that. And Fred will also be able to touch on that too. And again, excuse me if I'm going through this a little quickly. I'm happy to send you this, or you can go to our YouTube channel if you want a slower version of this. Today, I'm just going to kind of go over this quickly so we have more time for our special guest. On your right, you'll see this is an example of a single family home with an attached ADU. This was a garage conversion. So the types of ADUs you can do are attached and detached. They differ slightly between single family homes and multifamily. Single family can do conversions. You can build new and attach it to the house, kind of like an addition, as long as it has an exterior entrance. You can build typically on top. You can do detached units. For multifamily, though, it can typically can only be internal conversions, which is the attached term, or it has to be detached away from the building. But the detached ADUs can either be conversions or ground up construction. And depending on your city, you may be able to put them on top of detached garages or carports, which will help preserve parking. Here's an example of a detached ADU. So how many ADUs can you add? For multifamily properties, you can do at least one unit or up to 25%. The at least one comes into play if you have a duplex, triplex, or a fourplex. Anything else, especially, if you are now in the double digits, if you have 12 units, you can do 3 attached as shown below. If you have 8 units, you can do 2 attached. Those will fall under the 25% rule. And for multifamily, those are internal conversions. The space already has to be there, uninhabited space that you can convert. San Diego actually allows both. They have some of the most lenient rules we have seen. So if you are in San Diego, I think they even allow habited space to be converted. I'm working with a planner now to really get the details on what they mean by that, because from city to city it's different. But San Diego, go out there, buy some properties, because they want you to put ADUs everywhere. So it's pretty awesome. Single family homes, usually you can only have one ADU. That can be attached, detached, conversion, addition, whatever it is, as long as it has that exterior entrance and those independent living facilities. If the home is owner occupied, then you can do what's called a junior ADU. You're limited though to 500 square feet, and the junior ADU has to be within the existing home. It can't be detached or an addition that's attached. It has to be already within the home, and you have to be living there. For detached ADUs in multifamily, you can do up to 2 detached units, and that is if your city allows both configurations. On the right, you'll see some cities that do not allow both: Santa Clarita, Costa Mesa, Glendale, and the other ones listed, such as Long Beach. For single-family homes, you are still under the general 1 ADU rule, unless, of course, again, owner-occupied. Then you can have the junior ADU, which has to be part of the home. Seismic retrofitting, I will kind of speed through this, but if your building does have to do seismic retrofitting, this is for earthquakes, in case you're unaware, and for tuck-under parking. What's really cool is that we can actually combine your seismic retrofitting requirements, such as this, what you see on the left, which is a steel moment frame. We can combine certain seismic retrofitting elements with the conversions of ADUs when it's done in those tuck-under parking. So as you see here in this rendering, the red is some of the steel components kind of embedded and incorporated within the new structure of the ADU. So this was tuck-under parking that's converted into units. Here's another one, the red, if you can kind of see it, and that transparent wall is a steel element. If we don't have to use steel elements, we can use what's called shear walls, and that will also be incorporated into the walls, internally, externally, whatever it is for the ADU, whatever the engineer feels fit, and of course meets code. So this is showing a unit converted in the tuck-under parking and 2 detached ADUs. These are renderings, of course, that the property owner wanted to see before construction would start. Here's some current projects. I'll just go through these really quick. 360 square feet still gets you a nice 1 bedroom, 1 full bath unit. This is going to be done above a carport. These are 2 units. They're 2 bedroom, 1 full bath each, and they're actually just a little bit over 400 square feet. The owner preferred to have 2 bedrooms. That's what the area calls for, and can maximize his rental income. So we're able to get him these beautiful, brand new 2 bedroom units. They may be a little tight, not as spacious, but these are what the owner requested. These are 1 bedroom, 1.5 bath units. In the middle is the staircase, because these units are going to be put on top of detached carports. So the owner already has detached carports in the back of his property. And he's requesting to put 2 units, part of the 2 detached that he can do, on top of the carports. So these, he requested 1 bedroom, 1.5 bath versus 2 bedrooms from them. This is another building on the left. This is showing you what's already in place, just these parking spots. On the right is showing you the new units that are going to be built on top of these parking spots. Parking in the middle on the right-hand side, if you can see, or not parking, I'm sorry, stairway in the middle on the right, with 2 units on top. Again, 1 bedroom, 1.5 bath this owner prefers. This is an example of tuck under seismic retrofit building. They need to retrofit the front and the back. The front is a stall that they're turning into an efficiency unit. The back is a 2 bedroom, 2 full bath usage of that space. And we will be retrofitting the property at the same time. Here's some of our current projects that we're doing. We're demoing in the back and doing some site excavation to put a 1,200 square foot ADU in the rear, and we are remodeling the front home. Parking. In most cases, you are not required to add or replace parking. The state law says if you're converting the garage or the carport for the sake of ADUs, you do not have to replace that parking. And if your property is within a half mile of public transit, like a bus stop, then you do not have to add parking. What you do have to do specifically for rent-controlled units, and we always say for good faith for all of your tenants, give them plenty of notice that this amenity is being removed. And you have to, especially again for rent-controlled units, provide a reduction in their parking, the $50 to $200. That really depends on the spot, the density of the area, how many spots, what's in the lease, and so forth. Please call us. We'll help you find out, or speak with the housing department and the rent ordinance to see what you have to do for your property. Prop 13, which we get asked a lot. The ADUs do not trigger a reassessment. You will get what's called a blended assessment. So the value of your ADU or ADUs will be added to what you're already paying right now. The ROI potential that we have been seeing is about $120,000 to $1 million in terms of the cost. And we've been seeing an average of 10 to 20% annual return. So these again are some renderings done showing some units above the carport. And this is a 2-story structure that will be retrofitted and safe, preserving parking. So that is, let me see. So that is all for my presentation. I am, again, if you have any questions, because I know I kind of zipped through that, I can put in the chat here. Let me see, the info. You can email me for any additional info, or of course give us a call. I'm putting the number right now. We're happy to, let's see, 1-666-639-2381. We're happy to answer any specific questions you have, or property questions, anything like that. And now let me check if, yes, I am going to let Fred in, and I will patch him in so he can give his presentation. One moment. Hello, Fred. Can you hear me?
I got you clear.
Wonderful. Okay, everything is going smoothly today, and I will now patch you in to stream you live with the webinar.
Sounds great. And are you going to hand it directly to me, correct?
Yes, and let me also give you some hosting so you can share your screen.
Yep.
And I am patching you in now.
All right, and I'm going to screen share.
Window, Zoom, and share. Okay, let me make sure everybody can see this. Yes. And you are good to go, Fred.
Good. Thank you, Helen. And I hope you enjoy this conversation that we're going to have real quickly about the financial side to how to make an ADU become a reality. So I have 2 scenarios I want to share with you. One's an existing client of mine that did a refinance to convert his garage into an ADU. And so here's how the numbers fell, and they're pretty realistic to Southern California. So we did a garage conversion, and you can do a separate ADU with it, but in this case, it was a garage conversion. The client bought the house in 2017 for $1 million. And their current payment, because they were paying a little bit higher rate at 3.5% on $800,000 loan right here, their current payment was $35.92, so a little under $3,600. And then they pay taxes and insurance of $1,300. You can see there. So their total payment was just under $5,000, $4,937. So that's what they had as of about 3 months ago. So what we did is their value had gone up to $1.4 million, gone up by $400,000 in the last 4 years. They wanted to take $200,000 cash out. Now the ADU didn't cost that much, but I wanted to show this example because in some cases, a separate living unit could cost that much money instead of just converting the garage. So in this case, they took some money out to pay some other bills, and they did the garage conversion. So their new loan now was for $1 million. It was actually for a little bit more than $1 million because they had paid down this loan a little bit, but I wanted to keep it simple at $1 million. Their new interest rate had gone down to 3.25, so it had gone down just a little bit, and their new payment was $4,300. So it had gone up from 36, so it had gone up around $750. Their payment had gone up by that much, but got $200,000 into their pocket. Actually, in this case, they paid off a car for $50,000, so they saved that $700 a month right off the bat, and were even with what they were paying before. So all of a sudden, now they're paying $4,300. Their taxes and insurance are the same. So now their payment was $5,700, around as I mentioned, about $750 more. But again, they used part of the money to pay off a car, so they were kind of break even at that point. So they spent about $125,000 to convert, or they are currently spending $125,000 to convert their garage. And so if you look at it, they're going to rent that for $1,500 a month. So their payment went up by $750, but they now can collect $1,500 a month in rent. This particular client also wanted it available just in case their elderly parents had to move in, have some independence for them. So they're going to plan to rent it for month to month. So when you add up that $1,500, now their real payment after their rent is $4,100. Their old payment was almost $5,000. Now we're at $4,200. So they're saving around $750 a month over what they were paying before. Now they say, well, we want to pay off the mortgage quicker. How do the numbers look? If they pay their old mortgage payment of just under $5,000, plus now the $1,500 they're getting now, they pay off their loan in 16 years. Now on their original loan, they still had 26 years left to pay. By doing an ADU, they were able to collect $1,500 a month. Now, understand $1,500 a month is below market rent. And I use that number because then you can get it month to month in case the renter doesn't work out. I'm in the real estate business where we rent from month to month, and I enjoy that because if someone doesn't work out, we can ask them to move out. And so they pay off this loan in 16 years by just paying their old payment and the extra $1,500 a month. Now let's look at the real cost of this loan. Their mortgage payment was $5,700. They're getting their rent of $1,500. Now their net rent is $4,100, $4,200. But understand, their principal pay down every month is $1,600. So every month on this payment right here, they're paying $1,600 a month on principal, like paying down their loan. They're collecting $1,500 a month, and then they have a tax benefit of $677. This is like paying $1,800 a month in rent for a 4,000 square foot house, for a $1.4 million house. So they could either convert that one room, that garage, pay down their principal, rent it out, and pay effectively the same as rent for $1,877 a month. Where can you rent a house, a beautiful home, for less than $2,000. When you took you got to look at the tax benefit, you got to look at the rental of the ADU, and you got to look at pay down principal because rates are so low. So that was an existing borrower that we showed, and the numbers don't lie. You can give me a call anytime, and we can do the same analysis on your house. So this one was a proposed purchase. Now, how are my children are a little bit older? How are they ever going to buy a house and be able to, get off my couch, if you will? I mean, they have their own room, but they have good jobs, right? And they're all used to living at home or living together with their friends. How are they ever going to buy a house nowadays for a starter home for $800,000? Because there are some starter homes in Santa Clarita, San Fernando Valley, and LA that are for $800,000. Scenario number one is they go and they put 20% down. They save up their money, or their parents give them some help. They pay 3% interest rate, and so their loan is for $640,000. Their principal and interest is $2,700 right here, plus taxes. Now their new payment's $3,500 a month, $36.31. It seems like a lot of money, but in truth, when you figure about $1,000 of that is going to pay down principal, it's like paying $2,600 a month. And when they have a tax benefit of $600, that's like paying $2,000 a month in rent. A good idea, but they have to come up with that down payment of 20%. Now you could buy a house with 5% down, which is what I'm going to show you. So in this scenario, instead of borrowing money from family or borrowing money from your 401k, we have them put 5% down. So they're only putting 5% down on this $800,000 house, 3-bedroom and 2-bath house, simple, easy, 1,500 square foot house. The interest rate's going to be the same. The APR is a little bit higher because there's going to be this mortgage insurance because you're only putting 5% down. So the new loan is for $760,000. Now, what are we going to do with the other 15%? We're going to use that for the ADU. So follow me for a minute. Their new house payment's going to be quite a bit higher. It's $3,200 for principal and interest versus $2,700. So the pay, it's $500 more for principal and interest. The taxes and the insurance are the exact same, as you can see, but they're going to pay an extra $250 for what's called private mortgage insurance because they're putting less than 20% down. Their new payment's $4,300. Dad, I can't afford $4,300 or $4,400. What are you doing? This is more affordable, Dad. I'd rather pay $36 and not $4,400. Hold on, I tell my children. We're going to do a garage conversion for that down payment, that 15% we're not going to use. We're going to use that money for the garage conversion. And we're going to receive $1,500 a month in rent for that garage conversion. Now, their payment was $4,400-ish right here. Now it goes down to $2,800 is their net rent because they're going to start renting out their garage conversion. Now, nowadays, the great thing, and Helen shared this with you, you can convert your garage and you don't have to have necessarily a carport, which is great. You can put one in, which is great. But most people just put junk in their garage anyways. You're better off getting a storage unit for $150 a month and using your garage to drive revenue and build your wealth. So now hey, Dad, this is a lot better payment. I'd rather pay $2,900 a month than $43 because we're able to rent for $1,500. Now, a couple truths here. Rent is not always going to stay $1,500. It's going to keep going up, number one. Number two, as I explained to my children, $1,300 is pay down of principal, is building your wealth because remember it's principal and interest right here. So $1,300 is paying down principal. My kids will get, or my client are going to get a tax benefit of $475. So it's like paying $1,100 a month in rent. Now my kids can afford $1,100 a month in rent without a problem. In fact, my kids have been working for so long, they've saved up a lot of money in their 401k, which they can borrow from. And certainly, I'm able to help them and say, just pay me at the end, or let's figure out a way for I can do a home equity line of credit on my house. I'll give you the down payment and make buying a home a reality. The great thing is, this whole scenario, by buying a house for $850,000, after you add in the ADU, after you add in the first month's principal, and it gets better each month because you're paying down the loan, once you add in the tax benefit, assuming just the lowest 25% tax rate, it's like paying $1,100 a month in rent. Now, talking about building wealth, if they just took their original payment of $3,600 by not having an ADU right here, and the $1,500 in rent, they pay off their new house in 15 years. Now, a 35-year-old young person buying their first house, they don't dream of having their home paid off in 15 years when they're 50. But this is an example on how you can do it. So I know there are a lot of numbers there that I wanted to show you in a simple way, and I can tailor an analysis to your specific situation. But here's a perfect example where you can do a refinance on your existing home, pay off a car, do the ADU, or in this case, buy a new house for $800,000 and effectively pay what you can never get rent for, which is $1,200. So thank you, Helen.
Of course. Thank you so much, Fred. Super informative, very helpful. And I think Fred gave some great ideas with not only how can a first-time home buyer get into the housing market right now and help offset that mortgage, but if you already own a home and just want some rental income to help pay down your mortgage, have it paid off sooner than you ever thought it could be, Fred's your guy. Talk to him so he can help you make these numbers a reality.
Real quickly, Fred at fredarnold.com. If you want to reach out to me, it's real simple.
Sure,
Fred at fredarnold.com.
And I will put that in the chat.
Perfect. And my cell phone, I'm going to give you my cell. Call me anytime or text me. Better text me because then I can get back to you. Is 818-612-LOAN or 818-612-5626.
Excellent. So for anybody who will be tuning into this just from our YouTube channel and not live, if the chat does not appear there, just feel free to contact me at any time and I can put you in touch with Fred. And again, Fred's email, as he mentioned, is fred at fredarnold.com, exactly how it sounds. And his number is 818-612-LOAN. Or, of course, you can reach out to ADU1, 866-NEW-ADU1, which is 866-639-2381. It's also in the chat if you are able to see it. And we're here to help answer all of your ADU questions and hopefully make those numbers a reality with either your first mortgage or your current mortgage. So I want to thank Fred again for all of his information and resources. And please contact us, everybody, for all of your ADU needs.
Let me just tell you, Helen, you guys are doing a big service because this is a gift that the California legislature has given us to be able to do this without other cities blocking us from doing it. So it's going to be a way our kids are going to be able to get into housing in the future. It's going to be a way our parents can stay in their home but rent out a separate area and feel safe doing it. So this is really big. So thank you for sharing this with the world.
Absolutely. Thank you so much, Fred. And again, everybody, contact us for your ADU needs. We'll handle we provide the engineering, all of the plans, permitting process, and the construction. And for residential single-family homes or up to 4 units, Mr. Fred Arnold can assist with all of the lending and financial pieces. So please, I know a few people just joined us right now. So I'll just repeat the phone numbers again. You could reach ADU1 at 866-NEW-ADU1. That's 866-639-2381. And you can reach Fred directly at 818-612-LOAN. That's 818-612-5626. We're about out of time. So if you have any additional questions, just reach out to us, info at ADU-1.com or Fred at fredarnold.com, and we're happy to help you guys. Until next time, thank you, everybody.